Good evening, everybody. Welcome to the Winning Edge Trader Market Strategy Session for March 13th, 2016. I am joined by Paul Schatz. I have no idea how UConn did in the championship today. So
You know exactly how they did.
I don't know if he's a happy Paul or a miserable Paul.
As expected, they rolled. I mean, are you kidding me?
Yeah, very good. Just setting them up for massive, massive disappointment.
Hey, what are you even talking about? It's already a successful season. So what mass disappointment? The women are titans, and the men who had no business making the NCAA tournament are now a 9 seed. So we're playing with house money now, my
No,
friend.
it's not. First of all, you know what? It doesn't matter.
Doesn't matter.
Because people like you
Uh-huh.
who make excuses for when their teams
What
suck,
excuses? The
the
UConn, you're in a
championship is
crummy
more than the
conference. I'm a
championship.
realist.
What?
You're in a crummy conference. And until they won in quadruple overtime Friday, they were at best case a bubble and worst case going to the NIT. They're just not that good.
Aren't they the defending champs?
No, Duke won last year.
Oh, wait.
UConn won 2 years
Oh,
ago.
so they're the 2 year ago defending champs. Close enough.
They've essentially nobody left. Doesn't matter. College basketball is not like pro sports where you tend to repeat. Most of the kids leave after 1 or 2 years, so
Well, how
you're
come
always
how come
rebuilding.
how come Duke and Kentucky do well all the time?
Duke doesn't. Go. That was the first. Go look at Duke the last 20 years. And the only reason Kentucky does it because he's a criminal.
Wow. It's nice.
But I'm ecstatic. I figured they're going to the NIT. They got no business being in the tournament. They won in quadruple overtime. The minute they hit the shot to go to quadruple, to the fourth overtime, I turned to Ryan and I said, they're going to win this tournament. It's always that team that does the kind of the unexpected and gets lucky, and they should never have won that first game. The other Cincinnati just choked with a second left. They didn't guard the inbound guy who threw it right to half court, and they fired up a 60-footer to win. So there.
Anyway,
I was sleepy. You woke a sleeping bear up now.
great. In other news, Nestle recalled 3 million pieces of food because of glass in it. Did you see that? Including
No,
DiGiorno pizza, but that didn't stop us.
I don't eat DiGiorno pizza.
What happened?
All the products
I
with
don't.
spinach.
Oh, all with spinach.
And
Janine.
nuts was a big return today.
Oh, pistachio nuts was a big thing too. So
Oh.
now, so don't buy anything with Nestle because it has glass in it, which is pretty.
That's not good, I'm told.
No, it's not good. What else is coming up this week? The FOMC meeting, isn't it?
Yep, Tuesday and Wednesday.
Yeah. Now, we're in an awkward position, which we're not going to talk about that trend here because, that's for our inner circle members. But kind of weird the way it's setting up this time.
Well, it's also weird for the FOMC because I guarantee you that none of those geniuses thought that stocks were going to rally this sharply, and they certainly didn't believe that the ECB was breaking out the bazooka. So it puts them in an awkward spot because China's starting to rally, and Europe's on firmer footing, and our market's more than stable. So the cover to not raise rates is essentially gone. This will be a great this is the press conference, I think. Yeah, March. So this is going to be a really great Wednesday afternoon. So this is one where if you don't have plans, I wouldn't make them because there's going to be a small percent chance now that the Fed can raise rates. And I'd say if they don't do it now, then June is absolutely on the table, unless, of course, stocks collapse again. So this is really a fascinating one. If they do it now, then you're back to thinking they could do another 2 this year. If they don't do it now, and then the likely scenario is June, unless the market collapses, and then December.
Okay. Anyway, we'll see what they have to say on Wednesday. I'm glad you're excited about it because usually you're not excited about the FOMC meetings. Usually you're just
I
like,
love the FOMC meetings.
no, not usually. Usually like, they're not going to do anything. Who cares? Blah, blah, blah.
Oh, right. Yeah, but now you're in the kind of the zone where they could do something. I mean, if stocks hadn't rallied, what, 10% off the low, not like we called it or anything, but if stocks hadn't rallied, then I'd say, yeah, they're going to do nothing. But they're losing their cover to not, oil's higher, oil's dramatically higher. Oil's up, what, almost 50% from the low. Stocks have rallied. We had a great jobs number, we had a good jobs number 2 weeks ago. So the cover to not raise rates is largely gone. Now it gets fun again.
Well,
Now,
it's always good when the Fed is fun.
exactly. Talk for 1 second. I got to refill my water.
Okay. Anyway, hope everybody else is having a good week and they didn't get any glass in their Nestle products. If you have not liked the Facebook page, I don't know what you're doing. I posted a lot of articles up there, not originals, but I'm curating content from the big three, MarketWatch, CNBC, and Bloomberg. So I'm putting up some interesting stuff up there, most of it market related, occasionally some lifestyle stuff like the Nestle, which I'm just, as you can tell, I'm pretty much infatuated with. But you can go to, I will type in the link. If you are not already liking the page, if you have already, then it's fine. You don't want to like it again. I got like 5 emails from people yelling at me saying, I already like the page. All right, I understand. But if not, get on up over there and you'll be kept up to date with
What are we liking?
any new updates we have. What are we liking? What?
You said like the page. What page?
Paul and Saul. Facebook.com.
On Facebook?
Yeah, Facebook.com. Paul and Saul. Oh boy. Wow, I can't believe you're not automatically logged in. Everywhere I go, I'm automatically logged in.
But I'm on Terry's computer right now.
Oh, it's very nice. Trumbull, Connecticut. Amber Alert canceled. That's good.
How do you spell? Is it Paul ampersand or Paul and spelled out?
I don't even know what ampersand is, but I know what it is. But no, and you have 99 messages. It's a lot.
Paul and Saul.
Business economy. The first one with the American flag.
Okay.
So really, I just throw up, literally regurgitate, just other articles from all over the place. Right, a nice article about the Iranian market. Believe it or not, there was how it's really coming into its own. Some other things. Anyway, now he's back to doing what Facebook is made for and looking at pictures. Although I think Facebook was actually made to piss off half your list when you take a political stance. I don't know how many friends you lost from it.
How do you know if you lose friends?
Because they're not there anymore. I really don't care, because I don't really make big political statements, but I do go after these idiots.
I do.
I have friends that, I grew up with, and they're making these grand statements, and, and I'm just like, wow, I don't care what you like, but the people that are like, if you're a Trump supporter, defriend me now, or if you're a Sanders supporter, defriend me now, or if you're a this, and so it doesn't matter. It's not just Trump, right? It's not just if you like Trump, defriend me. It's if you like Sanders, defriend me now, and it's like, what's the matter with you? I don't get it. Yeah, you're right.
I unfriend nobody because of political. I mean, if you could be a communist. I mean, I'm happy to argue with you. The only people I defriend are jerks.
Well, that's impossible because I'm still on there. But I have never unfriended anybody. I have
I do.
gotten into rip-roaring fights with people, and except right. I'm sorry. I've defriended my wife. I'm not friends with my wife. I'm not friends with my mother-in-law or any of them. But I'm not friends with family. But I am friends. But as far as my friends go, I have some screaming political affiliations, and I just won't defriend them because say whatever you want, But I love the people that I mean, it's like these idiots that say if Trump wins, we're moving. I'm all right.
Yeah.
Well, that's going to be great. That means housing prices are going down. But my question, Paul, is this. I mean, we all know the king jerk off of all time that said that with the second Bush election.
George Soros.
No.
Yeah.
No, that's not the king. You know who the real king is. Remember? He was saying moving to France and all this.
Yeah.
You were saying au revoir and all that stuff. So, all right, let's say you make that grand statement. All right, let's say, you know what? If Trump wins, I'm moving. If Sanders wins, I'm moving. Whoever your affiliation, I don't care. Whoever you hate. When you don't move, what is the excuse for being such a wimp or such a liar or such a lie is a little strong.
Not a liar. But look at Soros. So look at all the comments Soros made about Bush. We all make the kind of the silly comments, but to make those proclamations in public is ridiculous.
Right. Well, a lot of people are saying that. I haven't heard anybody saying about Sanders or Hillary. Well, I mean, a couple of Hillarys, but
Sanders, I've heard plenty of people. Hillary, I mean, because Hillary is just an extension of what we have now.
Right, but they're saying it a lot about Trump. So what does that make the people if Trump wins, or I guess when he wins? What does it make those people? What are those people considered? Just jerks because they made these big statements and now they're not
full of hot air.
Right. Yeah.
So on the subject of politics, a good segue. So I was at a board meeting in California this week, and we had a political insider in who will remain nameless, and
George Stephanopoulos.
We were allowed to no more of an insider.
Okay.
We were allowed to pepper with questions, so I asked more questions combined than everybody else in the room. And I wanted to know. I said, as you guys know, I've not been a Trump supporter. I was supporting Jeb and then Marco. Whoever I root for usually loses. But I asked.
Except Obama twice.
Right. Who are who's his inside circle? Who's his inner circle? Who's his confidant? Who does he bounce ideas off of? And the guy just started laughing. And he said, in true Trump fashion, nobody. He's got, Corey Lewandowski, who's his campaign manager, but he's not really his inner circle. And he mentioned his two lawyers. I've never heard of them. And he said, I think it's really his kids, but he's not bouncing ideas. He's just saying, here's what we're doing. He has like a really tiny little infrastructure. And then I said, well, let's talk about running mates. So he said, this is fascinating, kind of inside the Beltway, because you got one group that says, he's going to look at, Ben Carson, he's going to look at Chris Christie, he's going to look at, and I said, what about Nikki Haley? And, the guy said, she makes the most sense, woman, minority, from the South, but Trump's made no decisions so far based on, kind of conventional wisdom. So, what he told me was he's betting that Trump goes for, which blew my mind, Giuliani first and Christie second. I'm like, Giuliani? He was my guy in 2008. He's not even relevant nationally, but I guess from what this guy understands, Christie and Giuliani would both vie for a cabinet spot, or attorney general cabinet spot or the VP.
Yeah, but there's no way Christie's going to be the VP. There's no
So
way.
that's what I say. He doesn't help Trump, right? Doesn't do anything. It's not additive. And then the guy reminded me that Wyoming, with its 6 electoral votes, really didn't help George W. Bush either. But Trump's done everything. He threw the playbook out. So it's just. Oh, I know. The other part I thought was interesting was if you take 100 feet, 100,000 foot step back, and you see that very slowly and incrementally the Republican establishment is very incrementally warming to Trump. First it was they hate him. First they ignored him and laughed at him. Then they hated him and they fought him. And now they're just starting to not embrace him, but they are not writing him off as a joke. As this person put it to me, the Republican Party needs Trump more than Trump needs them, because if they try to steal it from him at the convention, Trump will definitely run as an independent and a write-in candidate, in which case Hillary becomes the president, and there is no election. It's over.
Right.
So the whole thing is fascinating. I mean, fascinating in a kind of peculiar way. And with that, I guess we can move on.
Okay. Text me when you're done, but I'm probably going to be here.
Oh, look forward to it. Okay, good sign. Not shake the. I don't feel jet lagged during the day. I just feel exhausted when I'm out in the morning. Maybe that is jet lag. So, and now the clock's going ahead. I feel like I'm so far behind. But I guess if you're an East Coaster, it's been a ridiculous spring. Hope you're enjoying. I actually hit golf balls today. I skied yesterday, hit golf balls today. Something I haven't done maybe ever. And I'm not ready to give up on winter, even though there's not a ton of skiing left. I'm still holding out hopes that winter comes back and maybe we get one snowstorm. But who knows? All right, I am actually set up because I started this early, so we are good to go. A lot of my comments are going to be, yeah, it looks the same. Yeah, it looks the same. So this is not going to be anything in depth because nothing really changed. Every Sunday night since the bottom, I've said we're going higher. Market looks constructive. Well, we're significantly higher. Not a lot's changed. Sentiment is still nowhere near worrisome levels. People are not embracing the rally. They're still poo-pooing it. They're still saying it's a bear market bounce in an ongoing bear market. Bear market counter trend bounce in an ongoing bear market. The numbers don't support that, but whatever. Friday was just a monster. This really, so if you want to look for that day of holy geez, oh shoot, I'm on the wrong side of the market, that was Friday. I mean, the Dow up 128 bips, but look over here, the NASDAQ, mids, smalls, S&P, everything up on average probably 180 basis points. And look at the AD line over here, essentially 5 to 1. That's pretty strong. Up-down volume, up-down volume, pretty good. I wonder what happened with the guy who kept taunting me in the I bet he's not even here anymore. In the Sunday night session, it was like a week before the January low and a week before the February low, who gave me this whole, you heard it here first. Market's going to 10,000, all this stuff, and every time the market went down, he'd send me an email saying, "Yeah, I told you this is going to happen." So meanwhile, we bottomed down, normal correction territory. We're rallying. I haven't heard from the guy. And you guys know, I have no problem saying, boy, I was wrong, I didn't see that. It happens all the time. But to be die-in-the-wool and steadfast and not move with the market is just stupid. You shouldn't be in this business. You shouldn't trade your money if you're going to be that inflexible. You got to recognize when you're wrong, figure out how to fix it. It's always okay to be wrong. in what we do. It's just not okay to stay wrong. Wish I invented that, but I didn't. Let's see. So let's just dive in. Indices, not a lot of differentiation. Here's the Dow, down the S&P. Stochastics, very overbought. They've been overbought for a while. So here's where stochastics fail, because they got overbought, a week into the rally, and they stayed overbought. We're above the 200-day moving average. The 200-day didn't even cause a pause, right? Nothing. Went right through it. Love seeing that. And looks like we're going to close the gap of recognition here. And this will also complete the target I gave when we saw this double bottom. And I said 17.5 or 175 is my target. We're only 300 points away. Why not even? I'm not going to turn bearish because we reached the target, but the rate of ascent should certainly flatten out as we go on, maybe as early as this week. S&P looks almost the same. It's going to close this gap of recognition here. We're above the 200-day moving average. We're right near my target. I think my target was 2080, which is right up in here. I think we get there. But all the easy money's been made. So if you're just waking up, like I have friends, I'm on their email newsletter lists, and I don't taunt people in my, like I have no problem beating my chest here. But if you wrote a newsletter and you're in my industry, I'm not going to taunt you if you're my friend, even though it'd be fun. And people are just starting to say, you know what, maybe it's time to buy some stocks. I'm like, buy some stocks? The S&P was 1900. Now it's above 2000. What are you waiting for? But that's different ways to run money. Tiny's much safer and more conservative. He likes to wait for confirmation. I like to, into these down spikes, take a shot on the long side. If I'm wrong, get out. Take my little loss, move on. S&P, same as the Dow. Now we'll do some differentiation. Here are the mid caps, which have been very strong since the bottom. They're way above this gap, the key gap from January 4th, but they're not yet at the 200-day moving average yet, and they're overbought. They still look really nice. Small caps, as you know, I was long them on the way down, and I held on to them till about a week ago. When I bought the Qs, they're not yet into their gap, and they're not yet the 200-day. But price-wise, from the low to the high, I believe they're the strongest index. So they've been leading the rally. And the Qs also overbought, nowhere near their gap, their significant gap from January 4th, still below the 200-day. But in the short term, I like how they look in the. I bought them, so I better like them. I love this little coil here. Everything else was rallying, and these things were stuck in a coil. So I think I bought them. Was it Tuesday? Well, I bought it in the middle of last week, and I sold my my Russell. So I think they got some upside left. Europe, big day on Friday. Funny, Thursday, when the ECB announced they were cutting rates again and they were increasing their bond buying program, stocks took off at the opening and then collapsed, and they came back at the end. Big indecision day. Friday, everybody went home Thursday, scratching their head. Friday, it's like they woke up and said, okay, this is a roaring bull market. Let's take this thing higher, which they did. What do you do with Europe here? I don't know. It's too extended to buy it, although I do think it's going higher. So can I be a lot of help? No. Emerging markets have been, I've talked about it all year long, they've been really strong. And you're up from roughly 27 to 33. That is dynamite, along with oil. So are they done going up? Probably not. And they got some more upside left. Let me just get rid of some of these lines. Lines, there we go. Okay. That's emerging markets. Is there anything I want to pull up? I don't know. See, Brazil is extended. Nothing there. Russia still looks decent to me. India. India looks really sweet. So here's an idea for a long. India. My phone says it's going to be 21 degrees colder tomorrow than today. So winter's coming back. Supposed to rain tomorrow. I got to drive to almost Cape Cod to speak tomorrow night for a group. What about China? FXI. Yeah, it looks fine. Hong Kong. Is Peru the one? Yeah, Peru is going nuts. Look at Peru. 18 to 25. That's a monster move. Philippines. A lot of monsters. Oh, what a nice move. Shoot. This was on my buy list coming into this week. The China ETF. Love that little consolidation. Friday just said, goodbye. Give us 3%. Wow. Okay. All right. Let me just pause for questions. Then I'll go on. If you were looking for stocks to trade Europe, would you be looking at Germany, Dean? Let's see. So here's Germany. Well, I think a lot of Europe's going to look similar. I didn't do any kind of deep dive this week on which are the leaders, but Germany looks fine. Spain looks fine. Italy looks fine. So a lot of them look. France looks fine. They all look fine. I'm not sure that there's any differentiation to choose Germany over another country here. I hit the wrong button. Come on. Questions. Do you feel we should wait for a pullback? Kevin, I would. I mean, I have some cash on the index side from maybe a week ago. No, maybe a week ago, week and a half ago. But yeah, so I've got beta, which means I own indices that have more juice than the S&P, but I'm not going to commit money. One, you get the Fed meeting. The trend right now says you should rally right into the Fed meeting and then dump after the Fed meeting. So I probably won't throw anything more on the index side until then, until we get some kind of pullback. How about Greece? What the heck? Oh my God! What's the Greece ETF? GREK? Is that right, Greg? If I'm right, this is Greece. I mean, the last 2 months look like Europe. Another one, not as extended. So you want to give it a shot? I don't have a problem. I just rather buy it into a little bit of weakness. All right. 4 key sectors. Stocks. Looks looks like the indices, but it's really stepping up here. I love the way the stocks is looking. Talked about this down here as it was barreling higher. This is really good. Because why is it really good? Because this kind of uneven head and shoulders has now been, well, it probably got its target, so I take that back. So it got its target. Is this double bottom? Yeah, you're pushing it. But in any case, stocks are leading. That's good for the market. The trannies, which a lot of technicians I heard on TV hated it down here because it was going to dump to new lows. And I said, easy, easy, fella. I don't know if it's going to dump to new lows, but it's been lagging for so long. Maybe this is the time when it went, and then it just spiraled ahead. This is another positive. FedEx, which is my favorite to look at as an indicator. Nothing really to glean from there. And the airlines, jets, look stronger than the trannies, but nothing where I'm saying it's leading the market. It looks fine, jets. Internet sector, which I've been selling off in small pieces. I sold, there we go. I sold a good chunk right here at the last peak. And I sold some down here as well, and I rotated into the other crap that I own. But it looks fine. It looks like the Qs, frankly, maybe a little weaker than the Qs. Why did I go here? And I shouldn't have. So we got the semis look fine, the trannies look fine. Consumer discretionary, nice day on Friday. Look at these rejection by the bulls last couple of days, and Friday taken off above the 200-day, and now we're going to close this gap. And finally, banks stink. Here are the banks. Nice little bottom, much deeper pullback than the market here, but they are coming on. It's a Wednesday. It's all about obviously the rates, and the banks are going to react accordingly. If the Fed does go off the reservation and raise rates on Wednesday, banks are going to rally hard. If the Fed stands pat, then I want to see how the banks react. So if the Fed raises rates and the banks rally as expected, if the Fed does nothing and the banks sell off hard, that'll be very disappointing. If the Fed does not raise rates and banks don't sell off, that to me is an indication that something is changing, and maybe we should look at the banks as a long. 3 scenarios on the banks. Okay. Rest of the sectors, kind of quickly, a lot of them look alike. They're all overbought, almost all overbought. IGV, beautiful breakout from the coil on Friday. I'm glad we got, Tony and I gave one of the software stocks to the Inner Circle group. IGV looks like it wants certainly 100, if not higher. That's good. Telecom, this is not a real reversal. I dove into this. This is a couple hundred shares traded. So this candle should have been half the size. That's not valid. Although I think I can do XTC. There we go. So here's what telecom looks like, XTC. Looks like it's consolidating and wants to go higher as well. Let's see. Diversified finance look better than the banks. Here they are. Berkshire Hathaways, your credit card companies, etc., look better than the banks, but still nothing rosy. Retailers, I mean, God, they were just bludgeoned for a long time, and now they are just crushing the shorts. $38 up to 45 and change in short order. So, doing really, really well. I did not expect that kind of bounce, but they look good. Sentiment in these has to be cooked on the upside, so I'd look for these to stop sooner than later. Home builders. Rally's been nice in absolute and percentage terms, but they're still not back to leading again. Industrials, nice 3-day pause. So we broke above the 200-day, we pulled back to it, and now we're going again. These things are probably going back to recent highs, which is the November peak, sorry, and maybe even higher. I do think longer term, this is a group that warrants attention for a conservative investor. Materials, they look fine. I just haven't embraced them in a long time. Healthcare. Well, there has not been much to celebrate here of late, but maybe this is finally some kind of bottoming process, and Friday was the first day they're going to step up. I don't own any of this stuff. I'm not really focused on it, but they've just sucked for a long time. And the biotechs have been even worse. That's a head scratcher. They just downright stink. And I know, Hillary made her comments right here. How do I remember so vividly? Because I owned like 40% of my sector portfolio was long right here. So this is a ripping off of my face in short order. And they never seem to recover. I'm wondering aloud, is this just the one sector to watch that will gauge Hillary Clinton's prospects of winning the presidency? Maybe if biotech rallies really hard, she won't win. But this certainly looks like a Hillary Clinton stock. The defensive, oh no, let's go to energy first. Energy been trading fine, as we've talked about for weeks. On a percentage basis, nice moves, plus 20% off the bottom. They're not done. They still got higher to go. Same thing at OIH. Look fine. Going higher. Defensive stocks, REITs. I remember on a Sunday night talking, because I wanted to buy them down in here, and I missed the trade, and I said, wait for a pullback. Well, then I said, for this day, there's no doubt they're going to pull back, maybe, 68-ish, and now they're at 76, so that was good thinking, horrendous, horrific execution. But look, they're back to some significant peaks. So would I run out and buy IYR here? Absolutely not. I'd see how it reacted when it comes back to all these peaks around the 76, 77 level. XLP, which I have a very, very large position in and continues to perform well, all-time highs in XLP. However, clearly we are getting tired. Last 3 days, XLP does look tired. Utilities, same story. Great rally. I said it right in here on a Sunday night. This is the place where you should have backed up the truck. It was an easy one. And I think we're going back to new highs, which is 10% higher. Here's the old high. Come on, you dummy. Okay. So the old high is a couple of bucks higher. I don't know what's that other blue line for? Oops. So utilities may pause, pull back a buck, and then go for an assault on all-time highs. I have a big position here as well. Utilities, staples, the internet, in the sector side. Those are all the sectors. Oh, and gold, which has not pulled back. Gold's gotten really volatile. Has not pulled back yet. I mean, the one scenario I got to consider is we just have these hugely volatile days and then bounce between 19 and 21, and then another couple of weeks we just take off again to the upside. That will not be shocking. But this is certainly corrective behavior. But price-wise, the bears can't make any headway. All right, let's see what we got. All right, we covered Greece. We covered IBB for Jay. What do you think about healthcare? Yeah, I covered healthcare for you, Jay. Kevin, I went short some June puts in the S&P Friday. Should I be worried? I don't. June puts is a long way away. I don't know, Kevin. I can't even give you an educated answer. I am not the greatest naked option seller, especially after a 10% rally. I'd be comfortable selling them into a huge decline when implied volatility spiked, but up in here, I don't have an opinion, and I don't want to give you one flip off the cuff. Jay, I'm going to get to junk in just 2 minutes. Any other question on sectors, or we'll move on? Okay. AD line. Some of my favorites. I look at this move. So if you're a bear out there, how can you possibly not respect from essentially new lows to relative new highs in the span of a month? That is an awesome move in the AD line. This is a really broad-based, I said it, this is a breadth-driven rally. The volume isn't there, but the breadth has just been so powerful. And then just look at junk bonds. I mean, they were left for dead. I told you I started buying them weeks ago during this run, and I said, I hope this is not just a similar run to this in here, and I'm going to be an idiot. This has been one of the best rallies I can remember in a long, since probably 2009. Junk's extended for sure, but I don't think the rally is over quite yet. And the plain vanillas, and equally as good, if not better. These huge percentage moves for a relatively tame security, and it's straight line. I love this stuff. Well, I love it because at the beginning of the year I said junk bonds are putting in a major low, one of those, decade lows. So is this the low? Could be. Why do I not feel more confident? I have no idea. I've got my junk portfolios have 100% exposure. I don't know why I don't have more confidence, but it doesn't matter. As long as the rally continues, we'll stay long. If the rally begins to curl over and go down, we'll get out. Okay, let's forge ahead. All right, so we did the sectors, we did fixed. Let me do TLT. I also own, and it has not been a. Let's see. Arrow. We want array. So here's TLT. Right back to the downtrend line. Kind of put up or shut up time for the Treasury bonds. You could argue that it's going to fall out the bottom and we're going back down to the lows, or you can easily say this is a counter trend correction and this is a corrective action for this huge move, and we're blasting off to the upside. Don't have a strong opinion myself. Sorry. The dollar, I almost want to say ditto every week. This was the day that I called being the change, and I said we're going to go sideways, maybe slightly lower for a long time. That's all we're doing right now. So I'm not yet ready to embrace the dollar, although I do think it goes well north of these highs. Well north. Euro. It got crushed. This doesn't show it. Let me go back to a different Euro chart. So Euro got crushed Thursday morning on the bond buying news, and then it reversed and closed at the highs when people interpret it a different way. What do I think now? Gun in my head, Euro goes higher in the short term. Here's the yen. You've got smart money locked and loaded short on the yen. Does the yen look like it's ready to collapse now? It doesn't. I do love this beautiful inverted hammer here at the highs. Why do I love it? Because you can take a short on, and then if you're wrong, you stop out with a very small loss. And as you know, I think the yen's going, in the FXY is going to see 40, 45. The loonie. I laughed. I forgot when I turned on CNBC Thursday or Friday, but I heard two geniuses, Kramer and David Faber, talking about currencies, which they obviously have no business talking about. And then David Faber was talking about how bad the loonie has been lately. So I'm thinking how bad. The loonie's been the strongest currency on earth this year. That is a monster move. I have no idea what he must have read it somewhere last year and assumed that it's still in the toilet. Once again, when you traffic, that's like me talking about investment banking deals. The hell do I know? Nothing. Looney is really extended. Should pull back sooner than later. Here's the pound. I think like the yen, pound rallies, you got to get short long term. The elevator sub 100. That would be a huge decline from here in the pound. Gold. Now, gold's hung in really well for several weeks. When I said the bears had an opportunity, and once again Friday, bears have an opportunity. Gold's hanging well. Smart money has gotten very, very, very negative on gold and even more negative on silver, but neither one has started to move down yet. So tuck that under your cap as point of interest. Copper had a quiet week. Smart money is still long copper, and they've been long for what seems like years. But quiet week, not much to comment on. Natty gas. Last week, I said that there's an opportunity here for natty gas. I forgot who asked, but I said you could take it along with natty gas going into the week and just put a tiny little stop in a couple of ticks below, so you lose a little bit and you may make a little bit. So you've had a decent run this week. I just don't find the last 4 days convincing. You have no tall green candles. You have reversal day on Friday. It just looks to me. Even though smart money is really, really long, natty gas. Crude oil, smart money is starting to move the other way. Again, we've had a 50% rally off the bottom. Although when something goes down as dramatically as this 50% does not seem that significant. But smart money is starting to tilt the other way, back to the negative side on crude oil. Let's see. Did I miss any commodity? Gold, bond. Oh, just got the ags left. Let's see any questions. What percent chance do you think that there is for the S&P to make an all-time high this year? Well, that's a good question. When people say, that's a good question, as I think you guys know, the question is irrelevant, whether it's a great one or it sucks. It's just a time to stall and think through the answer. Trump doesn't do that. It's funny. He asks him a question, he just fires back. What percent chance? Well, in my beginning of the year forecast, I said that the market would see its low for the year in the first quarter. So if that's my thesis, then I got to say it's greater than 50-50. We see all-time highs this year. What percentage chance? All right, let me take a look. Now you've piqued my curiosity. Now let's go back and see. So on the SPY, we need another 10, 13. Let's call it 13 points, 130 S&P points. So in order for this to happen, I think the rally's got to go a little further. Then we got to pull back. And then we got to mount a better rally into the summer. And then we got to have some weakness in the fall when the election stuff really hits. So I would say it is 55% chance we hit all-time highs this year. Maybe a little bit higher than that. All right. Yeah, Scott. Scott said, I was calling for the all-time high by the end of the first quarter. Actually, Scott, to be fair, I was calling for 20,000 by Labor Day, but I didn't. I didn't think we'd have the correction in the first 6 weeks of the new year. So I still think 20,000 when it's hit. That will raise my next target to 23,000. I think I'll probably be off timing-wise by a little bit, but I feel I have no shaken confidence that Dow's going to 20,000 at a minimum before any kind of secular bear market hits. I think we're going to go much higher. All right, and let's go to some grains. Another one which we talked about, buying on this kind of little hammer, tiny little stop in and having it go. They've worked nicely in the grains, but we have no confirmation that this is the move of all moves that we're taking off to the upside. But this wheat still looks fine to me. I think that's the best of the grains. Here's corn, looks like a pair of twos. Beans, the rally's been stronger of late, but I didn't like the bottom, so I don't really have an opinion up here. Sugar, right back into resistance. What would I do? Probably nothing. Let the rally run out and then try to get short again. Cotton, oh God. Still digesting this huge candle. So we've got essentially, not perfectly, but essentially 1, 2, 3, 4, 5, 6, 7, 8, 9 days inside this wicked reversal candle. We should either put in a secondary low or rally here, but I don't think we're going to break this low anytime soon with significance. I think the upside is the way to go on cotton. And cocoa, last week I had no opinion. I still don't. It's rallying from this big decline, but I have no opinion on cocoa. And once again, here's coffee. Oops, let me dial it down because it's going to look like it's having this huge move, which it's not. So here's coffee. Friday saw the only significant day. I just keep shrugging my shoulders. Is this how many times do we say, is this it? 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 I don't know. One point we're going to go. When we go, coffee's going to double in a couple of months, but I don't have any kind of impetus or catalyst. I think it's right here. So what other questions do you have? Because I'm done. Questions, comments, concerns, disagreements, agreements. Yes, Scott, I do pay attention to the VIX because I own XIV. Here's my XIV that I've owned. I bought and sold it. I did a really good job buying it. I've done a really crummy job selling it. I bought XIV in here, and then when did I sell it? I think I sold it in here. Probably made nothing. Then I bought it back again in here, and I bought some more in here. I bought some more in there. So the VIX is calming down, and I'm sure a lot of people are saying, well, it's time for it to perk up again. Maybe a little bit, but I don't see any kind of move to 30 anytime soon in the VIX. I would probably be a seller of VIX into strength. But would I be surprised if it went back to 20? No, that's a one-week move. Wouldn't surprise me at all. Would I be surprised if it went to 30 anytime soon? Yes. Who do I think Hillary will pick as the VP? That's one thing, no one's really talking about that. Her camp is still struggling to put Bernie Sanders out. That's a great question. Who would Hillary pick? Because I don't know where. she needs someone obviously who gives trustworthiness to the ticket, because I think, has the lowest trustworthiness polling numbers of any candidate in history. And she's the female, so she doesn't need any kind of minority place on the ticket. And we know it's not going to be Liz Warren, or it's not going to be Biden. Although that's another thing that I heard last week, that there is a pretty good movement afoot. If Hillary gets indicted or gets into trouble, they're going to draft a Biden-Warren ticket with the speed of light, which I hope not, because I don't think anybody on the Republican side could beat Biden and Liz Warren. That's a great question on Hillary's side. I'm trying to think who her friends were in the Senate, and even though I don't like her, I honestly don't think she had any friends. So what kind of governor would be good for Hillary Clinton? Who are the strong? I mean, I heard today that my governor, Malloy, which I am not a fan of, has already been tapped as a cabinet person for Hillary. Oh my God, they can have him. Love to get rid of him. And Jerry Brown in California is just too much of a wackadoo, I would think. Maybe does Jerry Brown really help Hillary? She's going to win California anyway. Oh. Dean, you stumped me. Twice. I don't know. That's a really good question. I got to email this guy and ask him what he thinks. Mike, would I repeat off the cuff forecast? My forecast on January 1 was for the market to see its low for the year in the first quarter, and for the Dow to hit 20,000 by Labor Day. That was my forecast early in the year, and then I thought that there was a 55+% chance that we'd see all-time highs this year. Dean just asked me that question 10 minutes ago. Pete, do you think we will close the gap in the D gap this week? I think it's certainly greater than 50-50. Yeah. Would I be shocked? No, but I think the odds favor that. Yeah, Mike, I would think that market will see some volatility in the fall as it really shakes out who the two candidates chooses VPs and what the poll numbers say. I mean, right now it says Hillary is Hillary against Trump, and Hillary beats Trump resoundingly, with possibly the Senate going back Democrat, but the House staying Republican. That's what the odds favor right now. Let's see what Oli, I might have pronounced him. Sorry. We seem to be in an earnings recession, so wouldn't we need multiple expansion to reach new highs? Good question, and that really is a good question. Not to make the pause. I wouldn't call this an. I think we almost cavalierly throw around the word recession. I mean, earnings don't go in straight lines. They ebb and they flow. But I would fully expect earnings to crank up in Q2 and Q3. Mike, could you imagine if Donald Trump picked Bernie Sanders to be his VP? Oh, my God. And the funny thing is, they share so many common social issues. I'm not social issues. Welfare issues they don't share, but they share so many things in common. It's hysterical. Kurt, play the merger. Oh, Kurt's asking about oil and the S&P, the correlations. They're still there, but they're not 0.9 plus as they were, but it's still pretty strong. I'd love to see them diverge. It makes for a healthier market. Some analysts said the yield spread is bearish for stocks this year. No, it was, John, and all they were talking about was I'm assuming the spread between treasury bonds and junk bonds, which it was pretty bearish. And in that case, either stocks had to go down or junk bonds had to rally. Well, much to the disappointment of the bears, junk bonds have had a face-ripping off rally. So there's plenty of room to go in the spread move, and I still think you're still going to get defaults in junk bonds this year, but the whole recession trade is being blown apart for now. Scott, March Madness, is there a March Madness seasonal play? Not that I know of. Maybe there could be. It's when UConn wins their conference tournament, the industrial stocks rally. I don't know. Yeah, I know, Mike. I don't think Donald Trump's an opportunist. He's a non-conform. Yeah, I guess maybe he's a non-conformist for sure. He's a non-conformist. He's so unpredictable. Let's see. Thanks, Pete. I like to see. I hope Pete said. I think your forecast is spot on. That we correct, and then we take off again, and then we correct. As you guys know, I don't care if I'm right or wrong. I just want to be able to make money. I'd rather be wrong every day of the week, but run profitable portfolios. That would make me really happy. Although it doesn't always work like that. All right, last call. Oh, here's Kevin. Let's see what we got. Do you feel that when the buybacks slow down, we will see a decline in the market? Well, Kevin, they've certainly been one major catalyst for stocks going higher, have been buybacks. But, with the ECB unleashing a bazooka, essentially, you got more of a tailwind to global markets again. I mean, if this whole grand experiment fails, then you can see a real decline. I don't mean just 10, 12% like we've seen in August and in January. The next decline probably will be a lot greater than those whenever it sets up. All right, last call. Any other questions, comments, concerns? What the hell did Apple do this week? Ooh, Apple looks interesting. Get on Death Store, Matt. Looks like the Qs. Looks like Apple wants to reach out and hug someone. All right. Everybody have a nice night. Have a good week. My favorite time of the year, Thursday and Friday, March Madness. Can't wait to sit in my office and watch basketball on Thursday and Friday. Oops. Gotta do a pool. That's what I gotta do. I gotta email my brother to see if he wants to do a pool. I do a pool different than everybody else's. I do it where you pick one number 1 seed, you pick one number 2 seed. So you have 16 picks on your pool. You pick one of every seed rather than picking the brackets. It makes it a lot more enjoyable. All right. Stay well. See you guys next week.